Moving on with the second part of our mini project here, wedges that break the other way. And on the first part here on binary options, on fairbinaryoptions.com, on Binary Options Academy, we lay down the rules of a wedge, of a rising and a falling wedge, and what to expect, what normally these patterns are looking like, and what to expect after such a pattern. Well, what is happening here sometimes is that these wedges are breaking the other way. And one example, like mentioned on the first part, one example happened when market went and exploded higher after a rising wedge. I mean, take a look at the euro and the Japanese yen. It was the classical trap that the market made on bears. From the lows here, you might say we had an impulsive move. So this to be the first wave, this to be the second wave, this to be the third wave, the fourth wave as a correction, and then to have the fifth wave. But the fifth wave comes in the form of a wedge. Take a look at this. Like this rising wedge, you have the fifth wave here. So this to be the first wave, so one, and then the second wave, and then the third wave, the fourth wave, and the fifth wave. And not only that you have had a wedge like the wedge it is here, any wedge is traveling within the 1 to 3 and 2 to 4 trend line. So from here to here, like this. So that would be the 1 to 3 trend line. This would be the 2 to 4 trend line. And then all eyes, so all market participants, remember this is a daily chart, all right? So all market participants look for the 2 to 4 trend line to be broken. So this break that you see here on the theory here actually did happen here. Now, normally, this being a rising wedge that breaks the 2 to 4 trend line, everybody, the whole retail world, everybody jumped on the short side to go and sell or to go and buy put options. However, the market broke the 2 to 4 trend line, and then in 1 to 3 days reversed back above, and all eyes from that moment on should be on the highs here, because after the highs are being broken there is no turning back, and normally we should go and buy aggressively anything that follows there, because this means that that market is not going to come back and look at the lows again. This is being called the running variation of a contracting triangle, and it has a powerful thrust. Well, the thrust of a triangle, it is being also called its measured move, and this running variation of a contracting triangle has a powerful move. Take a look here. Almost no pullbacks. I mean, it is the daily chart, but only moving to the upside. No pullbacks whatsoever. This is the explanation and a classical example of what to do with a falling wedge that refuses to fall. Well, if a falling wedge is not that refuses to rise, if a falling wedge is not rising, then you might go and buy put options, because it means that that wedge is just a running variation of a contracting triangle. By the time the highs or the lows are being broken, it means that market actually ended that corrective wave with the triangle, and the new leg, a motive wave, is going to follow into the previous direction. Thank you very much for being here. Binary Options Academy projects on fairbinaryoptions.com. We just took a look at wedges that break the other way.